This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe, and today I am going to discuss a specific question I had where we were going to go back in Tesla in 2021 at a major low in Tesla and look at some of the reversals that took place and how I would have viewed them. I think this is a good exercise to do, and the way I'm going to do it is I'm going to do it from the hard right edge. I'm going to start with 3 time frames right at that 3-5 low and start scrolling through. So let's go ahead and get into this. So I think it's important to recognize that if I'm looking at a trade, I'm typically looking at 2 time frames at a minimum, and usually I go to 3, and preferably I'll use 4 if I can. In this instance, I'm going to just use the 3 because I think we're looking for where trade setups developed, not necessarily look at the specific trigger that took place. Although in this case, we don't really need the hourly for the trigger. So we get everything we kind of need on these 3 time frames, I think. So I want to start with this 3-5 low, and here's the monthly chart on the left, weekly chart in the middle, and a daily chart on the right. And you can see that's the reversal bar at the bottom, 3-5. Now, it's real enticing when you see this because I think you get all salivating because this stock has gone from almost 900 down to 550 in a very short period of time. And so you're thinking, God, this has got to rally. We got to make some money here. And the reality is you're right. But if you're going to play this for that kind of a move in this situation, for me, I would only be looking at it on an hourly chart or a 10-minute for a really minor rally, say from 600 up to 700. Now, it sounds like a big rally, 100 points, but when you're looking at a $600 stock, you have to take it a decent amount of risk because this stock is incredibly volatile. So, if we start from the left side and we look at the monthly chart and we see that we have gone from 900 to 550, it seems like a big pullback, but when you look at it in relationship to what's taken place, we are still really far away from the 18-month line. The 18-month is still down at 340, and price, which by the end of the month was at 667. Even at 550, you're still pretty far away from this 18-month line. So I'm just not all that attracted to playing something, especially on the monthly and the weekly at this point. The weekly chart is still above a rising 40, and it's below the 18, but the 18 is rising. So this would still qualify as a potential setup, but we've got a couple problems with it. If I'm going to do this, look at what the MACD is doing. That's telling me that there's some overrun in the signal line, and we're pretty stretched away from the 0 line here. And I'm inclined not to want to play this for a move back up at this point. Now, what you could do, again, if you go to the smaller time frame, is maybe play it up for a little rally up to like the midpoint, because that's possible the way this is going to play out. But I'm actually inclined to think once this rolls over and we've got separation like this on the weekly, that I'm looking for a rally to maybe play to the downside. And the reason is that this is still really far away from the 0 line, and we're still really far away from the 18-month. So to frame out a trade on the daily, I still want the wind at my back using the monthly and the weekly. So yeah, I've got this stretched away, but is it really a high probability play? Well, it is if I'm looking at this on a daily chart and then I go down to an hourly and then time it off the 10-minute. Then I can do that. I'm not going to focus on that right now because I want to keep moving forward on this chart. And if we go another month, now we've gotten a rally up, and let's go and look at what this did. So, let's just make sure the timing is right. 660. Okay. We're at April. So this is getting pretty close. This is rallying up. Here we go. So now we've rallied up 729. Now, here's what's taken place. Let's go ahead and get the daily up to speed as well. Keep moving this forward. Now, just to address this, we did have a trend line break, right? And now we're coming back to test. Now, again, I'm I don't want to take a 1, 2, 3 reversal on the daily until I see a trade on the weekly and the daily. I mean, the monthly and the weekly. And what's bothering me is that this is extended. So again, if I'm looking to play this pattern off the daily chart, I really want to see something prior on the higher time frames. And I just don't see anything that enticing. I don't like the way the weekly MACD is going down to the downside while this is trying to rally to the upside. You see how they're going in the opposite directions? When I see this pattern, I'm actually thinking short. Now, there really wasn't a short. At this point right here, that's where this came down and tested down in here. There's really not a play to short this, I don't think. I mean, I don't really want to do that with this big spike low. We're too close to that. So I guess I'm trying to point out where I don't see any high quality trades yet. I'm still looking, and the first one that shows up right now is taking place right here because now we have formed a pinch. You see how this has rallied up and we made a higher bottom, a higher bottom, a higher bottom. Now we got a narrow range bar right at the 18, and this line is starting to pinch in. See how the MACD line is starting to pinch in? And I see that I still have a lot of open air down between here and the 18-month line. So if I'm going to play this, I'm thinking to the downside. So now we need to catch up on the daily chart. That's April 12th. Let's just get this up to April 6th. Here's April 12th. Okay, now look at what we've got on the daily. So I can start to put this together and I can say, I've got something developing here. I'm stretched here. I've got a pinch developing here, this little pinch, right? I've got a pinch developing on an 18 that's starting to lose slope. So look at what was going on. Slope to the upside, and now we're losing it a little bit. That's what's causing this MACD to do this. So it gives you kind of a different view. But if you just look at the 18 and you see that it was rising at this pace here, it's no longer a straight line. It's starting to lose slope here. That's what's causing this to take place. So now I've got a potential pinch play to the downside. I'm stretched away on the monthly, and I've got this overhead resistance from this big up move and big down move. So the midpoint so from here to here, the midpoint, somewhere in this zone is around the midpoint on this rally, and that's what we've just rallied to. So it's starting to come together if I want to make a trade. Now, I know the question that was asked was I'm looking for a long trade. I'm sure we're thinking long side because this is a major bottom. But you got to look at it in real time and say, what am I thinking? And right now I'm saying, look, over the next month, what's the high probability trade? I think the high probability trade is another test of this low. That's how I'd be thinking right now. So the beautiful thing about this is now I've got an ABC to the upside, and the 18 is about to cross over to the upside here. Now look, on the downside, we had really strong ADX, and now we're rallied up and we don't have very strong ADX here. So it's starting to look kind of enticing to me as a potential trade to the downside, but I'm going to need a trigger on the daily chart. So that's really where we are right now. Now we've come down. Now we've come into the zone, and I don't have a trend line break. I mean, I could be a little bit more aggressive like this, drawing a trend line like that. If I want to do that, I mean, you could definitely look at it that way. But I guess what I'm trying to do now is see if I can't get a really nice setup, something that gives me a lot of confidence that the daily chart is triggering back to the downside for a move back to at least a test of this low. So that's kind of where I am right now because I've got a downside pinch. So this is really the trade time frame, and I'm looking for a trigger on this time frame. And the higher time frame is in conjunction. It is in agreement with this trade because I have a lot of room to the 18-month. I hope all this is making sense. And also recognize that we have made a lower peak in DI here. You see how this made a dramatically higher high in price, and this did not. So again, I'm inclined to think that we want to maybe start working our way back down a little bit. And now notice also that the MACD has turned down from a very high level. So we're starting to build up a pretty good case for another test down here. What's missing is a trigger here. So I came down and I closed below the 40. Is that a trade? Is that a setup? I mean, officially, you could take that as a short trade. As soon as this closed below the 40, you could argue that that was a trigger. Now, if you do that, you got to put a stop way up here. I don't have a problem doing that, but you have to look at, so if I put this trade on at 673 and I got and it's 783, I've got to risk a decent amount to make money down to here. And I don't even know if that qualifies as a 2-to-1. The minimum criteria for this trade is 2-to-1 if I'm going to trade it to the downside. So I want to keep watching this and see if a better trade sets up. And what ends up happening is it only had one higher low. If this would have made a second higher low and given me a pinch play, then I would have had the 2 time frame pinch to the downside. Okay, but we didn't have that develop. Now, we're trying to rally up, but it's just not doing it, and it keeps dropping. But I'm not getting a signal on this time frame. Now, I got the trigger on the weekly chart, and yeah, you could do that, but you'd have to play it with a stop way up here. And again, what I showed before is that is a very difficult trade setup for a target down to here, because I'm not really planning on this falling apart. So as I keep watching, this just kind of drops away, and I don't really get an opportunity to play this to the downside. So I'm not, there's no short play. I just didn't get an opportunity to do it the way I like to do it. Now, I'm risk averse, so I'm not going to take a 2-to-1 trade. I'm not going to take a 1-to-1 trade to the downside, even if it looks pretty high probability, which it did, until I get a setup down here that gives me a good trigger. So if you wanted to play it aggressively, the only real way you could have done it is either use this as your stop, or because you had a big green bar to the ups, you would have been doing it. Yeah, you wouldn't have used that. You'd had to use this stop up here. So because you closed here and then you rallied up, I mean, I don't like using the moving averages. I've said that time and time again. I think you could have easily come up through the moving average and it wouldn't have meant anything. So the last pivot high was right up here. That's the best you could have done, is shorting it there with that as a stop and seeing if it works coming down to the low. So at this point, I don't really have a trade. I'm still thinking we've got more consolidation taking place. And now all of a sudden, now this is starting to look more intriguing to me, because we've come down, we've tested this low. We've tested this low a little bit more. The 18 is climbing. Now we've formed a pinch on the monthly chart. Okay? I mean, so we're still pretty far away from the 18-month line. So that part bothers me a little bit. But I do have a little bit of a pinch forming, and now I've got the moving averages coming together. So as that's taking place, I'm getting a zero line reversal. Now the ADX is low. Okay? So if you're looking at this at 3.5 and you're trying to get long, you're too early. I mean, at least the way I'm looking at it. This is how I'm going to go through this process. And now we're at July. So I'm going to go to July here, June. We move up, come back down. So now all of a sudden, June, July. Now all of a sudden we've pulled back. And we've got a little green DI showing up. I think this is a potential trade setup that you could take. Although the reality is I don't have a setup, a true setup, I don't think, on the weekly chart. Because here's what I've got. I've got a MACD coming down to the zero line and low ADX. So what's the rule of thumb? I'm drawing a trend line in. So here's where I'm breaking this trend line. That's June 28th. That's right here. And then we come back down to test. So actually now, as we're talking about this, I could say that's a break of the trend line, or that's we've broken the trend line. Now we're getting our first sort of pullback. So I could take this trade. I could get long here and play it for a move as a potential starting move back up towards 800 or 900. Now, if I'm going to do that, I obviously have to get long coming up through here, and I have to put a stop underneath here. Now, when you're right at the 40 like that, give it a little bit of room, but you could have put it, right underneath the two of those lines and you wouldn't have been stopped out. I actually don't know what's going to happen here. I'm not sure. But I would think that we're going to come down a little bit more, but you never know. So actually, this turned into a pretty good tradable play. So I was trying to play this in real time and not remember so much. So I obviously you can tell it broke the trend line here. So you could have played that off the weekly chart if you wanted, but you have to put a stop way down here. What I like to do in this situation, especially when you've made a move on the daily and you're stretching the daily, is take the next setup on the daily, which was pullback and higher low. We've got rising moving averages. We get a nice buy signal with good ADX characteristics, green holding above red. I'm taking that trade long right there. So that's where I'm getting long, and I'm putting a stop down here. Now, I really didn't know. I mean, I was actually thinking this might want to come down and test one more time. But you have to take trades like this, risk 1% of your equity, adhere to your risk parameters, and if it stops you out, it stops you out, and then look for the next high probability trade. This is the first high probability trade since March 5th. Okay, now we've made a pretty good run. If I'm risking this much, that's 655 down to 618. I mean, I can take that amount and say I'm going to take a profit here and maybe even go to a break even. So if I'm long here, I'm going to put a stop now here, and I've taken a quarter of my position, maybe a third of my position, and taken a profit. And now I'm at a break even on the balance. So I'm not going to lose money. The question is, how much money can I make in a very, very volatile stock? In a very, very volatile stock, you might want to take a third rather than a quarter and maybe get a little bit more front end loaded with your targets. So I've made 1-to-1 at 2-to-1, maybe take another third. Now I've taken 2/3 off. And then I'm going to go to 1-to-1 as my stop on the second piece. So if I hit 2-to-1, then I'm going to raise the stop to 1-to-1. And now I've got a pretty good trade on my hands. And it doesn't really matter whether this turns into a major play. I don't really want to play this off the weekly and the monthly, in my opinion, right now, because this is still a little stretched away. Now, for all I know, this is just going to take off without me from a longer term standpoint. And if that's the case, that's the case. Let's go ahead and catch these up. So now we move up. 720, 720. Okay. Now, we keep going here. We get up to 720, and then you get stopped out on a pullback. So that's kind of how, I could keep going like this, but I hope this is useful in you understanding how I'm going through and looking at this. So I'm watching for the next high probability trade on where the weekly and the daily actually look attractive. Now, this is too violent. I can see that this took off, okay? Did I have a real trade setup here? You did. You had a long setup off the weekly chart with a stop down here, and you could have stayed in this, maybe taken one target, I don't know where, maybe up in here, and then you'd still be in for the bigger move. If you go down to the smaller time frame, there's positives and negatives. You take smaller risk, you take targets quicker, but you're not going to be in for the long haul in most trades. Okay, you have to understand that. And this was too violent of a pullback to play. So I would have missed that coming back up. Okay, I would not have played this. You can't look back and say, oh, I would have done this trade. I can look back and say I definitely wouldn't have. Look at the violence. Look at the big gaps. I'm not trading that. It's not. I'm looking for high probability. I like low volatility for the most part. When the volatility is rising like this, I wouldn't expect it to just take off again. But that's what happened here. And the reality of the situation is, if I were trading this, Now, there's two ways to look at this. If I'm a longer term guy and I want to play this for a bigger move, then I would have probably, and I highlighted this on my reports as a trade here around 700 for my longer term clients. So I'm not saying I wouldn't do that. I would have probably made it cross, hold, come back up, and get a little bit more confirmation, which is what I did on my report. You see how the MACD crossed here? You got low ADX with the zero line crossover on the weekly. That's a lot. To me, that's a lot more confirmation than this little tiny trend line break. But you can do it as long as you use the proper risk parameters. Now, from this peak entry where you're buying, you have to put a stop here, and then you have to figure out how much risk that is, and then take 1% of your equity and risk that much. So that means if I have a $50,000 trading account, I'm risking $500 from this move. I'm buying enough shares that risk $500 so that I buy here and put a stop here, I'll lose $500. I don't know how many shares that would be. You have to figure out the math on $50,000 worth in your equity account. So that's how you go about doing that. So, there's a couple entries off the weekly if you wanted to play this for a bigger move. I think there was one trade on the daily chart. If you're a trader and you're swing trading, personally, I think this was the only one, but it would have been profitable. You would have made some pretty decent money before you got stopped out. So hope this makes sense. I hope I answered your question. And I hope the people watching get a better idea of the types of things that I'm looking at or thinking about for the next high probability move. All right, go ahead and post any questions. Thanks.